Hey everybody, it's a midday podcast and a lesson in data aggregation, really. Uh, so I update the stock market, stock options algorithm during the day as we're tracking information. It's actually a pretty easy process. You just go to the stock screener on NASDAQ's website and you download a CSV file, which looks just like this. It has 7,700 probably companies. 7,633 companies apparently came in today on the NASDAQ and the Dow. You put that in here, you then refresh this pivot sheet, and this thing is an aggregate look at the entire market. It's really awesome. So you get to see which companies have moved the most. Marvel. I know Marvel. Marvel's a semiconductor company. They've been on the top of our list before. Today, when you refresh everything and you sort it, they are absolutely on the top of the list. And they have a rating rank, or an ABS number, as I call it, which is the absolute value closest to zero is best. And they're down all the way down to 2. You want to be close to zero down there. It never goes negative, but it'll sometimes show as negative if the company's going down, but it's the closest number to zero. So like -2 and 2 are the same thing. They're both good. Well, they're at a 2%. They're actually the number one pick of a stock to straddle today. Why is that? Well, if you look at their stats, they moved $13 already today, and the cost of their options is $399. Just before I recorded this video, I was able to get 2 options, and it came out to exactly $399 for the June 2nd expiration period. It was really funny because typed it in, put in market on my 2 orders, and it came out to be exactly $399. Now, that means that they have to move $4 away from the $62 strike price sometime between now and June 2nd. That means they need to get below 58 or above 66. Well, the energy around investing in semiconductors right now is the only place that you're seeing it in the market as of yesterday. And apparently, even today, a lot of things are going up. Today, you can see it's 78% gainers right now. Advancers, a lot more than decliners. A lot of these things are up, right? So you get a really broad look at the market and also which options are up and whether or not we have them in our sheet, okay? So point is I'm eventually going to, I believe, sell this product clear. I'm going to clear this out so that when I send it to you, you don't have any data from NASDAQ. You have to put it in there yourself. But you can have a limited look at my options rankings and numbers here, because this is really what you're paying for. This is me grabbing all of the options prices and putting the option expiration date in, the strike price, and what the range is. This process needs to be automated. However, I have not found any service that automates a query for bid and ask prices, because they're a very unique and really quickly changing number and has to do with somebody putting out a contract price or order. So you have to really have access to almost an order system to be able to query this. I couldn't find it on polygon.io, I think, where you can query other things. So I don't know any other way other than to manually type this sucker in. And until AI helps me solve that problem, we'll always kind of be delayed on this a little bit about what the actual cost of the options are, which this changes significantly every second sometimes. So you can never count on this number being accurate. It's just a snapshot in time, just put it that way. So you always have to look. Now, so I went in, I looked, and I bought this. This is most probably going to make money. Like, there's too much energy in semiconductors. For example, last night, I did a late night video. And I had this in order. Let's do this by ABS rank. See how Marvel is still number one even by ABS rank. This is the thing we need to rank by. The companies I talked about, it shows you how much they're moving today, and you want to see things like more than 100%. I sold my Micron call at a loss. I am a horrible stock options trader. I had one expire today. I didn't hang on to it because I never thought this was possible. Look at me being dumb. That's why you always hold those ones that, after you sell, like, don't sell things at a huge loss before the last couple days. And I sold this, I think yesterday at like at least a 50% loss. It would have been a gainer and I would have made money. Terrible, terrible trading that I did with Micron. However, it says I should buy them and try it again and do it right. By the way, I staggered my strike prices on Micron, which is why I screwed that up. One of the reasons. Don't ever straddle on different prices. Keep it on the same strike price. So that way you have a true value of what you're buying. You need to know exactly what you're buying. And it's much easier to gauge that when your call and your put are on the same strike price. So things on this list, some of them are doing really good. I want to find two things. I want to find this. There we go. Taiwanese semiconductor. I bought this yesterday. They have not stopped. As a matter of fact, let's look at all the semiconductors because it's Taiwanese and it's AMD, which of course I bought. Where are you, AMD? Where are you on this list? They're going to be down there probably because they're expensive. They're at 47th. I'll put a numbering system over here. Let's do that so that you guys know. I mean, you can look at the row number. That's what I'm doing. I'm looking at this over here, subtracting one. But $700. No, they're quality. So let me talk about this. So this is the options value thing, and I want to find they're in 30th. They are up $5.32 today. And I bought the options yesterday. I got them for less than this because I bought them in a delayed fashion and I got lucky that there was variance in the price. I got it for like $660, $640 or something. I'm going to look right now. Point is I want to talk about this. I bought this for the expiration date of 6/2, this one right here. And I have it at a strike price of 119. And yeah, right now I'm up 24% net on that option if I wanted to sell both sides of it right now. And that is because the call is going nuts because they're up $5.42 right now. So that's $542 in intrinsic option value. So because I spent 640-ish is about what I spent actually. So this is almost hitting that today. And it has another week, right? Like you can hold on to that, but I mean, the argument is to sell it at a profit and then just buy back in again if you can get it inexpensive again, because they're not stopping moving. This is a company that has been clearing. They've been our favorite company the first 3 weeks. Every time I look at AMD, they do not disappoint. It is so difficult to lose money straddling this company. They are moving and the trajectory is up, but they are just also moving. So awesome. Taiwanese, like anything semiconductors, crushing it, right? What does that look like again? Let's go here. Let's check that out. Semiconductors. Yeah, Marvel annihilating it on tremendous volume comparatively to the ones here. They're going up by $53 billion today is what that means. I'm sorry. No, that's what their market cap is. They're going up by $14 billion. That's what's happening. Yeah, I know. Stock market's crazy. Want to get in on it? Buy stock options. That's how you do it. So I want to look at market cap instead of we're going to clear out this filter, show every company, and then I want to sort this by market cap just to see how the biggest ones are doing. So we're doing descending by market cap. Yeah, I'm eventually going to sell this tool so that you can use it as well. I just want to figure out how we're going to update this database part of it, because that's really what I'm selling you is my records of grabbing information at a certain time. And I want to make it staggered so that basically we can have a range for what a company's options are supposed to cost, essentially, because you're basically rating the volatility potential of a company. However, what we're doing with it is we're making it related to the day that we're currently in, because the theory behind it is that there is inertia behind price changes. And just like a train, if the train gets moving fast enough, it takes longer to slow down. Like, you understand there will be a bigger range over the next 48 hours on that company. So if you can get the options which haven't caught up to the new potential range that has been created. And there are Greek letters that I'm sure are assigned to these ideas that I'm talking about in the price of a stock option. I've never really been able to understand them. I read over them and I just couldn't grab. I said, you know what? I kind of get what you're trying to do here. And that's nice. I'm just going to try to understand it my own way and build it my own way so that I can explain it to you and with non-Greek letters and really explain it to you. So there's a number that I'm sure is related to the inertia and movement, especially near term and most recent movement. So here with Marvel moving, you can absolutely, I mean, this is why the algorithm says to do this, is it knows that, and it's running that through the price of their option and also the spread range of it. So it's like, are people buying and selling this company frequently? So do we have a really good idea of what the price actually is? Like, is this a credible $3.99? It was a credible $3.99 because it was exactly what I paid for it. And on top of that, they move so much that, yeah, just watch something happen, right? Now, as of right now, I'm going to look them up to see how they're moving and see also what my options are, because now I've owned them for like 20 minutes just to show you how this works. They are currently at, yeah, exactly 62. So I'm down $23 on my option because they haven't moved much yet in the last 20 minutes. We'll see what they're at the end of this video, because they're already at 62, 20, 15. They're moving like 5 cents. They're just running all over the place. So watch this sort of make value, because who determines 62 to be the end price for a company that is a huge train moving right now at 14 billion miles, dollars per minute, right? Or whatever that, dollars per hour. So, all right, I hope I explained why like a company shows up at the top of this list for the day. And it means that right now, when you just ran the file, it means go for it. Now, guess what? Let's do it again. All right, so I have it on a different screen that you can't see, right? But all I'm going to do is I'm going to go to this link. It's opening up automatically for me. And I just press download CSV. I'm just going to show you how I replace this. And you get a CSV file and you open it up. I mean, the NASDAQ service there, I don't want to sell you a product with their information in it, because I think that I probably should have, I think that's a license issue, but I can sell you a product without their information in it, like blank like this, and then you just go there and paste it in. Like that you could do. And when you do that, you then refresh and you're going to see that everything is going to change here. So for example, when we look at all companies, you know, you got Apple on top at 1.2, 1.3%. Yeah. Apple on top at a 1.32% change or whatever. Watch when I refresh, watch what happens. Everything just changed. Now Apple's up 1.48%. And now everything's also changed here. And the best options of the day and the orders, Marvel still on top, right? But then there's a new order of other things here. And this brand new table goes into our current ranking sheet here so that we can resort by ABS rank and have a static look at stuff that doesn't change around in case we want to look at something and keep something for history to know what order things are really in. So I'm really confident in my Marvel purchase, because the algorithm, I mean, when does the algorithm miss a number one spot? I mean, other than Starbucks hasn't been profitable yet. Starbucks was number one on Tuesday. Everything else that's had a number one spot that I've talked about has been crushing it. Pfizer, Verizon's only been out a day, so we'll see how that goes. But yeah, no, high rankings here are really good. And Starbucks is still up here. They're actually going up today is the problem. They went down this amount before, so they're still only 40 cents away, 34 cents away from our $100 strike price. So they haven't moved away from our strike price, but they are still at least moving a little bit, $1 or more. We'll see what happens with them. Amazon goes up. Yeah, Amazon seems to be actually really good value. They've been moving around more than you would think for a tremendous company. Then Micron, IBM has another day and goes up 247. Unbelievable. Goes up 84% of the cost of their options. I sold IBM too early yesterday. I sold an IBM option that I could sell for $200 now for 25 bucks yesterday because for no reason. I'd already profited, could have held it. Terrible decision. Got too antsy. Unbelievable. IBM continues to rock. Cisco I have. Cisco must be up. Oracle I have. I think. Maybe I need to buy another one. Medtronic I have. So here's one where you're on the downside. So look at the first time we see something that's a downturner today. So this is Medtronic. Medtronic just bought some other company. There's some kind of news there. And they had a really big down day yesterday. So I bought them. They actually, at one point today, and perhaps right now, as I look at Medtronic, let's see here. I'm going to look for Medtronic for a second. I'm also going to keep an eye on Target. If Target moves positive, that would be hilarious. And I might actually make some money on them. Okay, Medtronic is down 2.8%. They were down as much as 3 today already. And so I purchased these yesterday and noticed that they still are showing up as a 3.9% and a really good pick, right? So because they've already moved $1.80 today, and that they only cost me, I'm going to tell you exactly how much they cost me. They cost me $237 or $238, it looks like they cost me. So I got them for even less than this. Well, I'm up $26 net on both of them right now. Okay. It's been less than 24 hours. It's been a day, right? And could already sell the put for more than the cost of this, right? Crazy. Well, so basically what's fascinating about that is, so what do you do here? Is there something substantial with the company that they purchased that is a more lasting issue with them? And are they going to continue to go down, and are you really going to bank your put? I think because it's only day one and you have a whole nother week next week, I'm not going to sell this yet at just an 11% profit is what is saying right now. I'm going to wait this out. But I always say if something gets to 100% profit in one day and they drop down another $2 or $3 or something, and I can sell this for 500 or 600, then I'm going to sell the call even on the first day. Absolutely. Even though you have a whole week left. But there would be a substantial reason that happens. So the algorithm properly putting a company up that is moving distortedly to the cost of their options. That's why they're up here. What else? General Motors and General Electric, both of the generals. What else has moved interesting here? Arista Networks. I keep glossing over this because it's $600, but something's going on there because I've seen them show up a couple times, and they are not just on today's list. Let's see what their call ticker symbol is. So Arista is number 2 today in terms of movement. They're A net. I have not looked this company up before. Do a quick little check. So, wow. Yeah, it was yesterday and today. They are AI related, apparently. What is your description? Arista Networks is a supplier of solutions use software to address needs of internet companies in cloud, cognitive, whatever, channel partners. I don't know. Well, so here's where I kind of want to dig into profits and income statements and stuff like that. This kind of situation, because it's more expensive, they have a higher share price. Maybe they're just a mover. Maybe I don't really need to research, honestly. It's saying they're just going to move more than $6. Now, does that option really cost that anymore? That's the question. So let's change that so that we get a true look. Because that's when I talk about looking at a company, you really have to go in here, and this is the work part. This is the part that either allows you to get an accurate information when you're looking at the table, or whether you actually got to go look at it yourself. So what we're going to do is we're going to update their price, and it's going to change their rating. So we're going to do that in the options cube though. This is where we store that. So right now they're at a 165 area strike price, and it's 540, 570, and 285, 320. So that just went up. So watch what happens. So they originally cost 598 in the version we were just looking at, but they've moved since then. And now they cost 858. All right. And their ranking just changed to a 22%. So they're actually not going to be where they are in here either. They're not 24. They're not an 8%. See how this just changed? They are now a 22% because of the cost of their options impacts their rating more. And you have to redo this and get your new table to be completely accurate. I'll show you. So then this, and then this is what I keep doing all day. It is a pretty repetitive and kind of annoying process, but it does find the best deals. So anywho, so Marvel is just showing up as number one. And let's do one little last check before I get off the video here and get back to work. They are at $62.65. And the net value of my options are still down 5%, are still down 22 bucks because they haven't moved far enough away. Remember, we spent $400 basically, $399 is what we spent to buy that. So until they start moving close to $4, the real net value of this doesn't go up because the net value is related to intrinsic value. So it's every dollar that they're further away from 62, the better it is. Yeah, they actually were apparently at 63.06 when I refreshed this already. So you see, they're just going to be all over the place. And that's why there's a much greater chance that they're going to stray more than $4 away from 62. That's why. That's why the algorithm's ABS rank is so awesome, is it knows that movement sort of divided by cost in a way with a bunch of other factors built in with different weights is what ends up telling you how difficult it is to lose on companies like this. It's pretty awesome. So, all right, guys, that's the midday update. That's how I do it. Like I said, I'll eventually sell this when I figure out how to deal with the options cube and get some type of AI assist that can bring in bids and ask prices and put them in the proper slot. Which just sounds like something, because we're in Microsoft Excel, that AI, was it Microsoft Copilot or Bing AI or Jarvis or whatever they're naming these things as they create them, something that will be able to do. And I know that there are ways to query specific stock prices, but I don't know about options, bids and asks and bids and puts and stuff like that. That is not the same type of thing as just a stock price. So we'll work on it. We'll figure it out. All right. Good luck, everybody. May all your trades be volatile, and may Marvel just bounce around and probably go up, because that's the direction that everything's going. As I need an AI assist to do this work, the stock market realizes that AI is going to be here to stay. Oh God, what was the story I read today? Was some type of like helpline fired all the employees and changed to AI because the workers unionized. And I was just like, yep. I go, if all of a sudden you have an option of not having someone work in your human resources department and have a robot do a better job than that person, aren't you going to take advantage of that? It doesn't mean that we're all going to lose our jobs. It means we're going to have different jobs now. We're going to have jobs like prompt engineer. Like a prompt engineer is someone who gets the AI to do the right thing and not the wrong things, right? Like there's a different profession, and the prompt engineer has the power of thousands of people essentially, because of the way that you can use the collective general intelligence. Really is the proper term, even if it's not the proper term for general AI yet. Just the assumed intelligence of the large language models like ChatGPT and the Bing AI, everything, like it's all coming together so that if you want to embrace it and use it, you all of a sudden just become so much more powerful and productive. So it doesn't mean we all lose our jobs. It means we eliminate redundancies we don't want. And now we have to repurpose our jobs to fit with this new environment where menial human tasks can and should be automated, and we can just check over them to make sure that they're right. That's really what you need to do. So like with the chat GPT, it's wrong a lot, and it's really convincing even when it's wrong. So in a way, you almost should be allowed to use chat GPT to write papers and do stuff like that, as long as you proofread it and make sure that it's correct. That's the part of it that we now need to be accountable for. So like we're all going to be using these AI tools, but we have to make sure that they pass the sniff test and that they're sane. And that's the real question about what are we going to do with this intelligence? Because of course we can't check over everything because it's smarter than us and it's faster than us. So we can only try to catch up to what it's doing and then analyze it as it goes. So the key is not to make so many huge mistakes that we don't have time to catch up and stop it. But that's my ideas for regulating what's going to happen with AI, I guess, is almost I think we should set its goals at being accountable. Man, but it's too smart for that. It knows how to lie to us. Man, it's tough. It's tough. I don't know the solution to this, but I know that what's happening with general intelligence and the accumulation of human intelligence all of a sudden being democratized in a way and being put out there for everybody is going to have immense benefits and also unforeseen consequences. So we're just going to have to understand this is a new world. And yeah, the new jobs are not hanging out in human resources. They're being like penetration testers for databases and sources of information and communications. Like it's a new world now. So that creates drastic movement in the market. And it's another reason that straddling stocks becomes extremely profitable, because all we're just betting on is overreactions. Overreactions all the time. And for some reason, stock market tends to overreact pretty much all the time. All right. So good luck, everybody. May all your trades be winning.